Well, John, look, we got another month of positive inflation news. Despite these historic tariffs, the latest numbers do show that inflation remained relatively tame in May. So the big number is the annual rate that came in at 2.4%. That is a slight acceleration from 2.3% in April, but this was better than expected. Month over month, prices were up by just 0.1%. Again, that's better than expected, and that's actually a deceleration from what we saw in April. Now, one reason why these inflation numbers came in very much better than expected is because we did see a drop in energy prices. In particular, gas prices were low. Now, economists like to look at core inflation because that excludes food and energy, but that also came in better than expected. I'm digging into some of the categories. We did see that egg prices, they did fall on a month over month basis again, so that is a good sign.
I want to make this point, which is that the concern at the Federal Reserve was not just that tariff-related prices would go up. It's that it would spread more broadly to other tariff prices, and that the issue of inflation expectations, which you talked about very eloquently this morning with Richard Clarida, would be an issue for the Federal Reserve. Not only did we get a decline in inflation expectations earlier this week from the important New York Fed report, but even if I zero in on just the tariff-related increases, I look elsewhere and I do not see broader impacts on inflation from the tariffs.
There's no way to look at these numbers and say they're not welcome news. I mean, a downside surprise to core goods is where people were looking for potentially tariff effects, and maybe except for isolated areas that Steve mentioned, you're not quite getting that.
I know I feel like I make the same video on repeat, but it's just because these people make the same claim on repeat, right? So let's get this right. We went through February, March, April, June now. We're in June now. And these people are still wrong about these data reports that come out. And they keep saying that, oh, the numbers keep coming lower than expected. Well, that's strange for me because I know the bias in, economics, finance, financial journalists. A lot of them are overwhelmingly Democrat, associated with Democrat. Very minimum conservatives are in financial journalism, maybe at about 5%. So if you have a bunch of liberals who are politically incentivized to be negative towards Trump, and they expect negative outcomes from Trump's policies, wouldn't that mean that their bias could be a factor in their analysis? Because we have data that already proves that based on your political affiliation, it determines whether you have a positive or negative view of the current economy. And the fact that these people keep getting, job numbers has always been above their expectations. Inflation always increased less than their expectations. In some cases, fell. These people can't be listened to. It comes to a point where now any industry, in my estimation, any industry that's overwhelmingly liberal, Democrats, I can't really trust their analysis. I have to factor in that in my analysis or my trust in the credibility of their analysis. Because it seemed like this profession still hasn't learned. They still haven't learned. Breaking. Inflation numbers are below expectations, surprising economists who had predicted that the president's tariffs would cause economic problems. And we're looking for it. We're waiting for it. And it still hasn't happened. And this is some of the news that people have a problem with. And let's take a look real quick.
Jerome Powell says that he's not changing interest rates for now, but he acknowledged that the president's, quote, turmoil is dragging down the markets and driving up prices.
Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. Forecasting is always very, very hard, and in the current situation, I just think uncertainty is remarkably high.
Jerome Powell is a pretty even-keeled guy, but he's pretty much saying the uncertainty is here. And it's already having an impact on the economy. It doesn't actually matter whether the other countries put in place tariffs.
Usually to get to be elected president, you have one superpower. Donald Trump's real superpower was that he was a billionaire business person. The amount of people who say to me, you know what, Donald Trump knows business. He knows the economy. You politicians don't know it. And now you have the Fed Reserve. What is he saying in plain English? He's saying the economy is slowing down, and he's saying inflation is going up. Donald Trump ran on bringing inflation down, and he's saying he's created chaos in the economy.
In his first 100 days, Donald Trump issuing tariffs left and right on the United States' trade partners, claiming that they'll reinvigorate the U.S. economy and make America rich again. But Fed Chair Jerome Powell is not sharing in those sentiments. He warned today of severe economic headwinds around Trump's tariff tirade.
These policies are still evolving, and their effects on the economy remain highly uncertain. The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth.
And he's a pretty mild-mannered guy. When Jerome Powell uttered those words, markets were like, we're out of here. Trump is every single day throwing away all of this goodwill of the American people.
Oh, absolutely, completely. And it's completely unnecessary. I mean, what you got today from Jerome Powell was, as we would say in Britain, a statement of the bleeding obvious. The tariffs are going to slow down growth, unemployment's going to go up, inflation's going to go up, and the Fed chair says it's going to be challenging.
It's almost like these people don't know what they're talking about. I'm supposed to trust you guys for the news? Look what you guys said in March. Look what you guys said in April. Look what Jerome Powell said in March. Look at what these guys were saying in April. Oh, Jerome Powell's a pretty well-mannered guy to imply he's non-biased or neutral in this matter. He's not neutral. I believe he's a liberal. Shit. Like you guys can't fool us. And this is why I'm talking about this dishonest objectivity. I wrote here like something that Jerome Powell said out of his mouth. Forecasting is hard. Yet you keep having this belief like somehow it's a high probability that this is going to happen, and it hasn't happened yet. Y'all been saying this, the tariffs will be causing us negative economic problems for 4 months now, and you've been wrong 4 times in a row so far. And every time I'm taking you guys less and less seriously. Make it make sense. I don't know how many times I have to make these videos. Like it's ridiculous. If forecasting is hard, Jerome Powell, you said this out of your own mouth. Shouldn't you give a balanced analysis? Say here's the positive case that I'm seeing, and here's the worst case that I'm seeing, and leave it at that. No, we don't want to cut rates because we're not sure how fast or how slow or how much impact the tariffs will have on the economy. You got 4 months of data now. I think it's time to cut the rates. As an American, I believe. Many Americans will agree with me. 4 months where Trump hits your target number of inflation and you don't want to cut the rate, not even a little bit. And this is why Jerome Powell is getting called too late Powell. And these politicians that talk negative against Donald Trump, all the naysayers, where are they now? Where are they now? Why they don't come make a panel again? Bring that arrogant British guy back to the panel who falls on fallacy of authority. I don't give a damn what the authorities say. I care about the evidence and observable proof that they use to demonstrate the probability of their analysis. That's the only thing I care about. Not what an expert said. Oh, Jerome Powell said. I don't give a damn what Jerome Powell says. I don't know who he is. He don't have no. And the funny part is they always talk about how one person shouldn't be able to dictate or influence the stock market, but Jerome Powell influences and dictates what the stock market does based on his position. But y'all don't want the president to have that power. Okay, make it make sense. And I want to show some clips of Scott Bessent just debunking a lot of the narratives that these Democratic politicians put out. And it just goes to show that the Democrats really offer nothing for the American people.
Good, Congressman. Thank you for that. And I would also like to talk about what this bill will not do to the economy. Because what we saw in the tax bill under the Biden administration, which I believe was immoral, was rampant inflation. Rampant inflation, which is the best way to steal from working Americans. And the basket of goods and services that working Americans require had a substantially higher inflation rate than the 21% reported by the Bureau of Statistics. So in excess of 30% of purchasing power was stolen from working families. We had, in the summer of 2024, We had a record amount of food bank usage in the United States of America at the same time that the previous administration's tax bill, we had a record number of trips to Europe. And that is not an America we want. Record trips to Europe, record food bank usage. So anyone who voted for that tax bill, that was the outcome. What we are doing is trying to get back, as you said, to President Trump's private sector job growth creation. And the tax bill will incentivize private sector growth. Equally important, this administration's economic plan is a three-legged stool. It is trade, it is taxes, and it is deregulation. And what we saw under the Biden administration that created the great inflation was we saw the impetus in spending as the government flooded the zone, but we saw substantial regulatory increase, so a demand shock was met with supply constraints. What we are doing with the help of this committee and congressmen like you, we are creating a private sector demand shock that is going to be met with a deregulatory release. So we will go back to 2018 and 2019. We will have strong growth and it will be non-inflationary.
So so Scott Bessent comes off London after sealing a tentative deal with China, right? That also caused the market to soar, right? Who am I trust more? The guy that is articulating kind of, hey, this is the goal that Trump is trying to do with the tariffs, with trade, and the stimulus, the incentives he's trying to create in our government using the big, beautiful bill, right? Trump, he kept his promise. He had the House passed the $9.3 billion cuts, the Doge cuts, which I mentioned way before. Anytime I talk about the economy, I always feel like I got to talk about that bill. So Trump is moving, he's trying to satisfy everybody that voted for him. And a study came out recently that there's more political diversity on the right than on the left. But the left has the goal to call us a cult. But they all in unison say the same damn thing about the economy. And all of them end up being wrong. Make it make sense. And this is one of the reasons why many people speculate that Bessent may emerge as the federal chair after Jerome Powell terms out, I believe, next year. And the inflation expectations, I don't know who's setting them. I don't know the metrics that they're setting them on. But if I'm looking at the track record, based on what Scott Bessent is saying, their approach is more closer to reality than whatever the hell these liberal experts, these economists are saying. And this is why a part of me is starting to see that a lot of people, they use their profession as a way to push forth their worldview onto other people. And I'm starting to get tired of it a little bit. But, I digress. Let's take a look at this clip and, go from there.
Well, Charles, at this point, I don't know if the Federal Reserve Chairman Jerome Powell is misinformed, uninformed, or chloroformed, because the inflation picture, as President Trump has rightly called it, is being taken care of. Inflation came in lower than expected last month. We learned that this morning. CPI is at its lowest level in 4 years. Gas prices down to 4-year lows. Oil prices down 15% since President Trump took office. And what is the Fed? They're doing absolutely nothing. What Economics 101 teaches you is that when inflation comes down, you lower interest rates as a result. Americans deserve a little bit of relief when it comes to their credit card bills and their mortgages, and Jerome Powell can do that if he would stop trying to sabotage the president and his agenda.
Well, of course, President Trump has been pushing back. He had comments again today saying the Fed has to cut a full percentage point. But, what do you make of the pressure campaign? Some people say it works against the president because now Powell, if he would look like he's bending to the will of the White House.
Well, it's not bending the will to the White House. It's bending the will to the economic facts and realities of the ground. Here's the truth, Charles. The New York Federal Reserve has its own estimate of what they call the natural rate of interest. That's the interest rate from the Fed that neither slows down nor speeds up the economy. Their model says that the Fed's rate right now should be 3.3%. Where is Jerome Powell keeping it?
I don't know. I don't know about all that, but the point is that he's making is pretty correct, right? If there's already 4 months of data, 4 months of a pattern showing, hey, the inflation is hovering around your target number, which you say is the biggest concern. Like Jerome Powell said, his biggest concern is that he doesn't know how fast inflation was, and their target inflation is 2% average, or like 2%, and 2.3, 2.4 last month in May. Trump is hitting those targets. So Trump's like, where's the cuts? And a part of it, like, I don't know. This is why I say, like, there's some politicking going on right now between Jerome Powell and Donald Trump, because I see other countries, their economic chairs and secretaries and advisors and ministries and ministers are cutting rates already, and we're lagging behind them. Like that, it doesn't make sense to me. It's starting to not make sense to me. And a lot of times, I think a little bit of games are being played here. But I digress. Let's continue with the video.
4.3%, a full percentage point above where rates actually should be. So President Trump, once again, is absolutely right. They need to cut by a full point. That should likely take place over the course of a couple meetings later this year. But that's what needs to happen. And so President Trump has the right instincts here in calling for the Fed to loosen policy, to recalibrate it, and to align it with the actual facts on the ground.
So, James, we keep hearing about the end of American exceptionalism. Nobody wants our dollar. They don't want to buy our bonds. Well, we just an hour ago had a 10-year auction, 4.421. That was the number. The win issue was 4.428. Indirect bids, 71 points.
And this is the funny part. Like if you on finance YouTube, I'm on finance YouTube. I like to see financial videos. A lot of these finance YouTubers were saying how everyone's de-dollarizing, but the 10-year Treasury auction had a strong positive sign for U.S. assets. So where are they getting this analysis from? And this is what I'm talking about when I say a lot of people, not a lot of people. There's many people out there that make their decisions based on subjective conclusions and not observable reality. Observable reality, all the hard data is pointing that, hey, Jerome Powell, you need to cut the rates. And Jerome Powell, still in fear mode, based on his subjective belief, he believes, no. I'm gonna be proven right one of these months. And it's almost like he's waiting for justification, like evidence to come in his side and be like, oh, look, we can't cut rates because of this one thing. Oh, so Trump had 4 months where he was doing good. And let's say June, they finally get the inflation that they were looking for. They won't focus on the past 4 months of Trump having positive news. They're only gonna focus on the month that he had the bad one. And this is the problem that many people are starting to observe about our media, is that they're too tied into their own personal bias and the need to be right. Because, higher than expected, what that means? Translation, economists was wrong about Trump's economy, but instead of blatantly saying that, they do their little word jargon stuff. And I'm tired of the buzzwords, honestly. But, I digress. I think I'll leave it off right there. Let me know your thoughts about the economy. Do you believe that Jerome Powell should cut the rates since yesterday, since last month? I don't know. Let me know your thoughts and perspective about Trump's economy. And do you think that the Democrats have given up on this fear mongering about a Trump recession? Because the way things are looking now, it seemed like the Trump recession fears were overblown as per usual by leftist narratives. I'd like to hear your thoughts and perspective in the comment section below. Don't forget to like, comment, subscribe. Please share this video if you're feeling so inclined. It really does help me out in the algorithm. And I'll catch you guys on the next one. Peace.